Hello and welcome to Markaz videocast. Here's a brief overview of the Markaz banking report. The report begins by giving the reader a synopsis of the banking sector in the GCC, highlights ownership patterns of select banks, and compares the size of the banking sectors across countries relative to GDP. For any banking system, its regulatory structure is of key importance. Our report discusses the adoption of Basel Accords, lending limits, and capital adequacy ratios. Potential investors would be interested in getting a sense of the top 5 banks in the region, trends in their profitability and lending growth. That's precisely what the next section of our report covers. Talking about the banking sector in the GCC, can one overlook the Islamic banking segment? The report dwells on the size of the Islamic banking sector, aggregates variables for the 3 segments, including Islamic banks, conventional banks, and conventional banks with Islamic operations. We then move on to a comprehensive coverage of the 2011 banking sector performance, analyzing trends in net income, provisions, loans, and deposit growth. We look at key indicators such as loans to deposit ratios, net interest spreads, and cost to income ratios. The report throws light on the banking sector index performance across countries and its impact on shareholder wealth. Given this background, what are our expectations for 2012? The subsequent section discusses 2012 forecasts for the GCC banking sector as a whole, while a later section centers on country-level forecasts. The report studies the challenges faced by the sector, including asset quality and technology adoption. The final section concludes with profiles of top banks from the 6 Gulf states. Thank you.